Hey everybody, Chuck Barone. Tuesday, December the 20th, 2022. We're down to the very end of the home stretch on this year, guys. All that's left is a little bit of market madness for a couple of days and some ho-ho-hoing. Hope everybody's ready for Christmas and some fun and happy times with family. As always, I want to start the show by welcoming everybody, thanking you guys for your support. What you guys do every day keeps us going here. We appreciate you guys more than you know. In markets today, well, market had kind of a pretty quiet day for the most part. Stocks ending up small today across the board. A very small gain for the markets today. But the good news is it did end a 4-day losing streak, so at least there's that. The bond market today down 2, yields up, especially on the 10-year, which was up 10 basis points today to 3.68, with the 2-year basically flat up 1 basis point only, 4.27%. So now you got the inversion shrinking a little bit, and that's not a bad sign. So actually the bond market, even though it was down, giving a little bit of a positive sign. The dollar down again today is setting at 104 even on the index. The dollar, there's really no reason for the dollar to be going down other than, 104 is pretty high on that index. It was as high as 114. So the dollar, for no real reason, I guess other than the idea that maybe the Fed's not going to raise rates anymore, or they're almost finished with their cycle, weighing on the dollar. Metals today, always the opposite of the dollar, up nicely today. Gold up $31.50 to $1,819 per ounce, a nice gain for gold today. Silver up $1.18 to $24.15. It's funny, I was just saying these prices are going to be coming. I knew that metals were looking for a reason to rally. These prices look good. I think metals still have a ways to go. I think you're going to see silver well above 25 very quickly. I'm not sure. I'll have to look at charts on gold, but gold 2000 maybe. Anyway, we'll be keeping an eye on metals. I know a lot of you guys who are viewers have an interest in precious metals, especially gold and silver. We'll keep you guys up to date on that. Oil today up with West Texas Intermediate, a barrel at 76.02, up 83 cents. Still pretty low. It was in that 80 to 85 trough there, trading for a long time. Now it's been under 80 for a little while, and even though it was up today almost a full dollar, it's still only at $76. So oil, the market looking a little shaky. Natural gas prices down 9% today as that market just swings crazy all over the place. 534 for their million BTUs. Be cautious in oil and gas, guys. This market here seems to be pretty volatile. It looks like there's a lot of rumor mongering and guessing on demand here. So be very cautious with these because, I could see oil up $20. I could see oil down $20. There's no rhyme or reason to it right now. So be cautious with your money, guys. Bitcoin today up 243 last time I looked. 16,863. This is another red flag waving here. I know a lot of you guys are big believers in crypto, and the story of crypto may play out in the end to be a positive one. But right now is a very negative time. You got this Sam Bankman fraud guy getting extradited back to the U.S. as they start peeling away the layers on this FTX and all the stuff related to it around it. If there's bad news, and I'm going to guess the news will be more good than bad coming out of this. I don't see any halos anywhere with FTX. That could affect all of cryptos. So be very cautious here. And keep your eyes peeled because the market could change quickly as new facts come to light. And news you guys need to hear today, well, there's all kind of crazy stuff going on, but the first thing on the list today, housing. We got the housing starts, we got the building permits, both coming down pretty dramatically. These are pre-pandemic lows now. Prices continuing to fall across the country, not as quickly as I thought they would, but coming down pretty dramatically. Prices here in Vegas down well over $50,000 from the top of the market to where we are now and continuing to fall. I was talking with Jordan yesterday, and the amount of sales in December, which is usually not a very busy month. Nobody wants to be moving over the holidays, but sales are sitting at like 468 so far this month. We're in December, past the middle of the month. Usually 2,000 is a slow month. About 3,000 to 3,500 is a normal month here in Vegas. So housing just cratering. I think that, I don't know about the rest of the economy being in a recession, but I can tell you guys right now for sure, and have been saying this, real estate and mortgage are definitely in a recession, if not worse right now, because there's just no demand at all. I think the only people buying houses right now are people who've are selling a house to buy a different one, either upsizing or downsizing. Not a lot of activity with first-time buyers. The market needs those first-time buyers to function properly. My concern is, we're going to see real estate turn into another corporate thing where, companies like Blackstone, BlackRock, just all Starwoods and Carlyle and all these private equity groups glomming up all the real estate, where there's no room for the guys like us, Joe Sixpack, Charlie Schmuckatelli, to get into real estate at all. The American dream, is financial independence, and that starts with owning your own house. If they're going to make it impossible for people not already in real estate to get in, that market is going to be so dysfunctional. It's going to be a massive vanishing of an avenue to wealth that a lot of middle-class people have gotten to the middle class from real estate. It's not good right now. And another interesting thing, too, I was reading that the SEC now has inquiries about Blackstone's real estate fund. You remember last month I was talking about the fund and how they were limiting redemptions. People were they only could honor 68% of the redemptions because of the covenants in the real estate trust, and Starwood's having the same thing right now. They limit the amount of money that can be withdrawn every month and every quarter. Well, I guess I understand that with real estate, because when you own property, creating liquidity is not something you can do overnight typically. So they have to limit redemptions. And now they're getting way more redemptions than they expected, over the limit pretty much on a monthly basis. It's going to create a little bit of panic here among these investors, I'm guessing, as they want to get their money out and can't get it out. Now, even though these companies are not listed anywhere, the SEC in making inquiries about their situation, I don't really think it's something that they're actually actively investigating some type of wrongdoing. I think they're just trying to get in front of this, where if there's a colossal liquidity crisis in these funds and there's so much demand for redemptions that they have to start fire sailing some assets, I think the SEC and the regulators want to get on top of that. Crazy stuff there, guys. Also today I was reading labor costs in the U.S. continuing to rise as workers are demanding record higher wages to take jobs. Listen to this. The survey said the lowest average wage that Americans are willing to accept to take a new job, $73,667. That's the lowest wage. That's in November. Now, that's the highest wage demand on record. Annual salaries being offered on average did go up to $61,187 in November, also a new record. So what we're seeing here, guys, what this is telling us is this wage price spiral. The big fear the Federal Reserve has, the big driver of inflation. Now this is kind of setting in, where companies are being forced. $61,000, the average wage, seems pretty high to me. That the demand would be $12,000 a year higher than that is really crazy. So now you're going to have, people aren't going to take jobs at 61 if 73 is their minimum, right? So it's just going to be fascinating to see how this all plays out. These are big numbers here, guys. You know, you're talking going from 60,000 a year to 70,000 a year is a very big move. We'll see how the corporate world is going to deal with all of this. Typically the way they always do. They'll pay the money, but they'll get it back plus profit from us, the consumers who use their products. But this stuff does usually not end well. And, you know, I was laughing. They're talking, I'm listening to these, you know, I listen to these political hacks, the Elizabeth Warrens and the, you know, there's nut jobs on both sides, right? Freaking out. The Fed is going to cause a recession with their rate increases. Let me quote my friend Greg Manarino here when I say, duh. That's the reason the Fed is raising rates, is to bring about a recession. They want it to be what they call a soft landing. Also, picture the Hindenburg, right? But soft landings never happen. It's a great idea. It keeps people calm while they're watching everything go up in flames around them. Soft landing not going to happen. We're going to have a recession. That's what the Fed wants. You need this recession. It's, in essence, almost a healthy recession because they need the demand to come down to bring down prices, right? Now, the prices are up on food. I hope there's not going to be a big collapse in demand for food, guys, or gas, or the stuff that everybody's been feeling in their bills, you know, electricity in their houses and heating their houses and water and everything else. I don't know how, you know, a recession really going to bring down the cost of food or the cost of heating your house. Gasoline, we know, is up and down all over the place, but you know, these are staple stuff that Americans deal with every single day. Well, we'll see how it all plays out. It's going to be fascinating to watch it. Finally today, wrapping things up, I was reading that they said Americans through the first 3 quarters of this year lost $6.8 trillion in household wealth. Assets are down, stock market, bond market, real estate, liabilities are up, people borrowing more than they ever have. We have people upside down on their mortgages now where they owe more on the house than the house is worth. You know, anybody that bought a house in the last year in Las Vegas is likely upside down right now. Household wealth cratering. The only reason the middle class, the numbers in the middle class are not collapsing is because so many people from the upper class are falling back into the middle class. We have reverse Americanism here, where instead of people climbing the rungs of the ladder higher, they're falling down the rungs of the ladder to classes they were formerly in and have moved out of or were never in. Now, you know, you got more middle class people falling into the working class, more upper class falling into the middle class. This is not the way we want the cycle to go here, guys. Hopefully you've been taking our advice. If you have, you're going to be doing okay. Saving a little bit of money, living within your means, investing conservatively. Don't try to hit home runs now, guys. This is the time to preserve your capital. We'll have more on this as we go toward the end of the year as there's less and less market news. Tomorrow and Thursday, big days for data. We'll be back tomorrow to bring you up. I think we get CPI tomorrow. We get GDP tomorrow. So we'll see where the GDP ended up for the last quarter, where it's going to end up for the year. Going to be a fascinating day to watch and the market's reaction to it. We'll be here to bring all the news you guys need. Until then, guys, take care. Thanks.